Oh, go ahead.
No, I was just going to ask, what is the 37.1?
The new pull pivot indicator.
Thank you.
Interesting.
Don't start.
Walking away.
Don't start.
Uh-huh.
Yep. Loaded it, but I hadn't opened it yet. Let's start.
Your man's in there trying to start right now. So let's keep going. Okay. Tonight we're gonna talk. We're gonna talk about some strategies here. I'm gonna be laying these. I'm gonna be laying these out as we go. You know, laying them out as we go. We on. Let's all take notes, shall we? Why not? So one of the first things I want to talk about today, right, is confirmation for the breakout swings. Okay. We'll talk confirmation for breakout swing. That's number one. For those that don't know, are not familiar with the breakout swings, it's a little indicator that we put together. We like to put things together, kind of help traders on their journey. So, you can put that link at the top of the clubhouse if you want to see what we're talking about. But for now, just come join us over on the Twitch stream. Let me put this over here real quick. We'll put it in the chat down below. All right, 1 second here. Let's put it in the chat down below. All right, so if you check the room chat on Clubhouse, you'll see I just put the link to our Twitch channel there. That's where we are streaming live right now. If you wanted to see some of the setups we're going to discuss and so on and so forth. Oh man, some interesting things happened this weekend. One of those things is I was discussing the VIX with a student of mine. And as I'm discussing the VIX, what do we come to realize? We come to realize that the current level on the VIX totally coincides with 30 to 70 on the RSI. Right. So that's pretty interesting. Like if you were to measure out this just about, 5 to 5.8 to 6% move, you'll see it pretty much takes you to about 70 on the RSI to the upside, 30 on the RSI to the downside over the next month. So I guess we're expecting some sort of an extension in either direction over the next month. We'll see how that plays out. All right. Oh man. So that was one of the things there. I mean, other than that, the reason we got 37.1 here, I made a slight adjustment to the 20-day percent range. Made a slight adjustment to that. I have it now with conditional formatting to let us know when we're getting a sequential close higher or lower. In this particular case, if the market's moving higher, this will let us know whether or not we actually have a close above where we were, just about 4 days prior to that, which is known as the TD sequential. Right, the TD sequential indicator actually it's an indicator that helps people understand where turns may come in the market. Now, I have not yet figured out how to I've not yet figured out how to get to the point of like getting it to count those joints. I think that would be dope if one of these days we could figure out how to get it to like print a nine. But we did find like an indicator once on TradingView that came close, but it just didn't work. It was pretty, it was good, but it was not good. So we still need to figure that out one of these days, man. I'm gonna get it. I'm gonna figure it out. I'm gonna figure it out. All right, now, um, shout out for the follow. Ooh, is that an I or an L? I'm gonna go with an I. Y'all gonna have to let me know how to pronounce this one. This is the first time I have not known. But I don't know. It seems like a tricky way of spelling lucky. You know, I don't know. It seems like lucky. We're gonna call you Lucky for the day, man, until you tell us how to pronounce this. All right, because lucky ain't as bad as maybe some other ways I might have approached pronouncing this. So we're gonna shout out to Lucky for the follow, man. Shout out to Lucky for the follow. Cecily, cut it out, okay? It looks like it's spelled Lawcke, right? So I'm not sure. Oh, it could be Iawcke, right? So you see my dilemma here, right? So we're gonna go with Lucky, man. So
It looks like an L to me, and I'm thinking Locky.
see, that's why I'm saying I'm going to go with Lucky. Okay, I mean, let's. Lucky is not a bad nickname. Matter of fact, they may bring us good fortune. Okay. All right, so let's go with that. We're gonna run with it. What's up, Kelly? What's up, son? What's going on, guys? All right, so we're discussing the pro pivot indicator today and some of the swings, some of the swing trading strategies that we can use here. Okay. All right. So for one, we're gonna talk confirmations for the breakout swings. Let's just start with that. I mean, I'm not even gonna let's just start with that without the gate. Okay. So now, first things first, right? Obviously, you need to find yourself something that's got a signal on it. I already knew that JP Morgan had a signal on it, so we're gonna rock with that, right? Um, one of the best things that we could have happen here, right? What's up, Orlando? I think I need to get my other device for my what do you call it? For my comments, but I'll grab it in a second. So I'm a tad bit late answering comments on Twitch. Pay me no mind. Matter of fact, I'll just pop it open on this phone here. Keep it simple. All right, there we go. All right, so I'm conflicted between wanting to see who's joining the room on Clubhouse and wanting to see who's commenting on Twitch. It's conflict of interest. Um. Anyway, so let's say you get a signal here, like we have right here. We have a breakout swing, signal to the downside, right? So we're getting um a bearish signal. That's letting us know that it might have been okay to take a position here. I think what's interesting, all right, I'm gonna say something that's very interesting as as it relates to this particular signal here that we're getting. It appears that Warren Buffett actually cashed out on another $1.8 billion of Bank of America. I'm just laying that out there. Just laying that out there. I want to know what he knows, but I guess we'll never know until we know. Or we'll never know. Hmm. Uh-huh. Let that soak in, okay? Now, either way, This is the first bearish signal we're getting from a financial name in a while. Okay. Now, what are some confirmations that we can have here? All right. Number one is outside of the breakout swing signal, you can see here that we're clearly trading below that -50 on the percent range. All right. So that's another, confirmation there. And then you can see the percent range is highlighted red. Now, make no mistake, that is not there to say, oh, this is a bearish signal for the percent range. Actually, that is your sequential signal. Okay? That is actually your sequential signal right there. So what it's telling us is that you have a bearish signal to the downside. The percent range is it's in the chat right there. Noted right above where you just commented in the chat. You talking about the Twitch link? Um, I don't know what to say about that one. Go ahead, Cecily.
No, that was an accident. Clubhouse has rearranged everything, so we keep hitting wrong things.
Okay. Gotcha. Let's switch it to the up top. Let's see what we can do there. Un momento, por favor. Let's move it up top. All right, try that. Okay, now, so, all right, excellent. See, that's why I be trying to keep my clubhouse open. See that? Well, we count that as one in sequence. You're not counting sequences. You're not counting sequences. So here's how this works. Okay, so you have your breakout swing. All right, boom, right out the gate. That's your first signal that says I could take a swing to the downside. From there, we're on this end here. We're saying, okay, you know what? Do I have a bearish signal on the percent range? This particular case, the answer is yes. Now, the conditional formatting that will have it be red or green, what I'm saying to you here is this is not a signal to say, hey, that's a bullish or bearish reading on the percent range. Actually, it's to let you know whether or not that that percent range is on the way up or on the way down. That's what that's for. So in this particular case, you're closing below where you closed at 4 days ago. That's what this is saying. All right. So you could get a greater confirmation from this, as opposed to, imagine if you were closing above where you were 4 days ago. Then you're sort of still in a what we would call that's how you would look at it. You're still in a bullish countdown, or or you're still in the 13-point reversal signal, which means that you haven't really gotten that first shift yet, right? So either way you put it, if I'm still hitting these moves to the downside, it's not until I get that first tick in the green that I can say I've reversed anyway, right? So there's really no need to count. You're just waiting for the breakout swing to the upside with a tick to the upside and a percent range signal that actually gives you uh, gives you the green light. Okay. Now, so give me 1 second here. Let me grab this. Mm, all right. Now, the next thing we're looking at here, all right, is the weekly high and low. Okay. So the signal becomes a lot stronger, right? If you're actually breaking out of the range with it. All right. So in this particular case, you have breakout swing, trading below negative 50 on the percent range. You got a sequential to the downside to go along with that, and you're trading below the weekly low. Okay. So these three things here really help your case. Another two things that can be, added is obviously if you're trading below the 8-week average, which is your 40-day average in that particular case. So that really signals more of a medium term situation. All right. And then, like I said, there's two of them. The other is for the shorter term, am I at least trading below that 2-day baseline, which is what we might consider we might consider the pretty much most recent fair value, right, in that regard. Now, in the shorter term here, we also look at this as a candidate for reversion to the mean. So you'll pay attention to how far you are away from this thing, up or down. All right. And I think I just figured out how. Okay, nice. I was trying to figure something out earlier before I open up the session, which is essentially how to figure out how far we are away from the trying to figure out how far we are away from the. Here, we'll zoom in a little bit for you. All right. So yeah, so we're gonna be eventually matching how many ATRs we are off of like recent highs and lows. Then that's gonna be a really like decent it's gonna be a really decent move there as well. Okay, so that's that. So those are your 5 key ways to really identify um, you know some additional strength for the breakout swings. And of course, you can see here our low range hasn't been hit yet. So if we can hit that low range, that's gonna really help as well. But I wouldn't really pay that much mind that it hasn't been hit yet. because once it does, it's actually a part of the secondary breakout swings and as well. So who knows? This getting hit may actually just double down on the signal here, but I'm gonna write it anyway. All right, so those six particular points right there are gonna help. And what I'm gonna say is, like, if you're using the 2-day baseline as a confirmation, then you can use the breakout um, levels here. So your opening range breakout for the bearish or you know or the bullish sides in this particular case. So let's say the market opens on Monday. Everything else is still solid, right? You got your 20, you got your 20-day percent range. Everything is still, everything is still good there, right? A second here. I want to have it off the screen. That'll work right there. Yes, you got you got everything that's working out here is still good. Um, in that regard, you know, um, this breakout that happens on that particular day may be even, maybe something that you can really take for the longer term. Of course, confirm with your RSI, right, that you're not diving into something that's extended. All right, please do. You do have your, you'll have another confirmation that's going to be there, and that's going to be that you're trading below the previous day's low. That doesn't show up until the actual day of, right? And you guys know that it'll be whether this will be, highlighted in red or in green, right? So the previous day's low can also help you with that. Now, so for JP Morgan, you might want to look for maybe, you know, um, maybe some sort of a test of resistance or something of that nature. And this may end up being a nice, solid play here. You can also confirm by checking the financial, right, ETF, XLF, and seeing what's going on with that. So you see, yeah, so your 8-day trend is bearish, your monthly trend is bearish, right? You're trading below the 8-week average, but you're still above your weekly pivot, right? So, think little things like this. I might say, okay, cool. I want to see them. I want to see the entire sector fall below the weekly pivot. Maybe that gets a little more confirmation. You see the low range and the weekly pivot were pretty much, you know, um, providing some support last week. The weekly low 51.65. Right. The low of the day was 52.28. So didn't quite get there. All right. So maybe a fresh weekly low for the financial sector, trading below the weekly pivot, breaking the low, breaking the low range. To go along with that, maybe that helps the case with JP Morgan. So another confirmation can be sector ETF. Right, that could be another confirmation. And of course, if the market itself is moving in that general direction, that helps out as well. All right. Like one of my top recommendations for anybody that's going to be trading using the breakout swings is to find something that you like to trade a lot and trade that a lot. Right. That way, as you're keeping track of it, you're able to see the transition in the signals, right? So for me, obviously I like to trade. I like to trade financial stocks. I like to trade I like to trade the SPY, QQQ, IWM. But I also like to trade like AMD and Micron, right? But you'll see me trading the same things a lot. And then every once in a while I have something that I might have a curveball thrown in there. But for the most part, I trade the same things all the time. That's going to help because you can again you can see the transition. So right now, SPY is without signal. Right, it's coming off of a bearish move here. So let's talk about this. This is another one here, right? What's up, Anthony? What's up, Daniel? So this is another one here, actually. So having a recovery back above negative 50 after breaking below negative 70 to negative 80. That's going to be a bullish signal there. All right. So if you get a breakout swings while you're recovering here, so let's say you start getting some recoveries across the board here. Maybe approaching the weekly high, or even that might be a sign that you're headed back towards it, so you can actually target the weekly high, those types of things. And this is why you keep your eyes on these. So if you look at these specific things that I'm talking about on a consistent basis, you're gonna find trades. You're gonna find trades. Even if it's just a day trade every once in a while, like on Friday, right? We were able to target this 671.97. Look where the market closed at. Right? The minute the market opened, we saw right the 28% range was approaching negative 80, and that the current price was, well off of the 2-day baseline, right? We saw that right out the gate. That's the first thing we noticed that morning. So as soon as we broke out above that bullish key level, we went for it. Right now, generally, we don't take trades when we're below the 2-day baseline back to the upside. Now, I gave you guys the exception to the rule on Friday. Look at where we were. We were at 661.21. We opened at they don't have the open for that particular. Let's go down here. We opened at 665.38. Right, we opened at 665.38. All right, you can see. All right, so we were nearly one full ATR away from the baseline at the open. That is, that's definitely a bit of a stretch, right? But what made it more of a stretch was your key level here, right? You were, at the lows, you were approaching the first point of support, right? You were breaking the second standard deviation, right? So you had a lot of things that was from an about. So just like paying attention to the things that are in front of you, like all those things that I mentioned can help you, find these trades when the time comes. It's really just about understanding what they mean, right? So negative 80 here is it's just oversold, right? That could be just for the short term, no problem. But when it happens also suddenly, right, it adds a little extra punch. Right? It adds a little extra punch. Let's go back over here. All right, as you can see, let's go to the SPY. you can see it was also open where? It was also open right at our monthly R1. Okay, more confirmation. Okay, so by the time we recovered around this area here, we were ready to take it back to the upside, and we got out as we got close to the lows of the previous day. Well, I got out. I think at least one or two people stayed in. My plan wasn't to be in there for too long, just to take advantage of it because it was there. You know, I tend to only take the simplest and easiest day trades that are in front of me, and I tend to never miss out on those ones. Right? Uh, if it seems a little, seems a little complex and over the top for the day, then I just leave it alone. I don't bother with it. Okay, that's the real point there. All right, I'll literally just leave it be. All right, now let's see here. Evening to you. All right, so that's another. Let me just go ahead and take a pause actually and check the chat. Let me make sure there's no questions over there. Okay, no questions. Cool. So that's actually another one to look at there, right? So, if you hit negative 80, right? So we're gonna one of these days we're gonna come up with all kind of fancy names for these trades, but it just is what it is. These are just these are just things that exist that you can take advantage of, right? So your 8-day trend is similar to your super trend, right? So in this regard, you just hit near negative 80. You just hit near negative 80 on your percent range, and now you're recovering. All right. So if you were to recover and hit the high end of this 8-day trend, that's in itself a bullish signal. All right. Because you're coming from a oversold state and bouncing to hit the high end of your range. You can look for so like what you have here. This is your midpoint. So you can look for some support on your midpoint after tapping the high end of the trend. You know, this is definitely a solid. This is definitely a solid look. And what you can do a lot of times is take the breakout and then use this midpoint as your initial stop, right? Especially if you're coming off of something like this. All right, you say, okay, cool. I'm going to watch for the break back above negative 50. I'm going to see if we're breaking 677.25 when that happens. I'm going to look for the breakout swings. Those three things alone are great confirmation. You already know you're going to be above. You already know you're going to be above the 20-day average, right? You see right here, 670, 615. So you're back above the 20-day average at that point, and you're just getting back above it too. You see that? So you're not going to be too far off from the 20-period moving average. You can see that. Right? It's going to be just getting over that 20, which is a great place to take your entry. So, then you have maybe a couple of bucks below the 20 will end up being your the point where you want to right? You want to slide back out, right? So you can see how this would be a great swing trade here. So I'm just giving you guys some, and I kind of like the way the session is going today, right? So and I think this is something that I'll kind of hold these sessions this way each week, where if I see some opportunities, these are going to be the ones I talk about, right? And I think this is going to be a big opportunity next week, and the reason why is because again, I have the opportunity to take this trade as it's breaking above the 20, as it's tapping into that to the high, to the high end of that 8-day trend. As it's recovering on the percent range, and then from there, I can just set my stop right here, right here. Okay, makes it real easy. And I know if I break this like right here, I know I'm back below my 20 period moving average at that point. I know that now, right? So no need to overthink this one. And I can assure you this is one that I'm more likely to take next week. If this happens, this is probably going to be the one I take next week. I'm taking this trade right here. It's going to be too easy. Like whenever I can find a trade where everything lines up this way, I can't bring myself to not take it. And so it's kind of like, I guess, we're torn between two elements here, right? On one end, you have JP Morgan with the potential downside move. On the other end, you have SPY with the potential upside move. So if SPY doesn't make this happen, then maybe JP Morgan is the move. And let's talk about these two plays, man. What y'all thinking? Y'all talk to me. What y'all think about these two plays? Good evening, Anthony.
What's going on? Quick question, slightly off topic, but not that much. What are y'all watching while you're talking?
The Twitch link at the top.
I bet. Thank you.
No problem. Yeah, that's not off topic, man. Good to see you.
Likewise, good to be seen.
Hey, you want to hear off topic question? Just give Cecily 5 minutes.
Why did I know you? Comfort.
Oh my goodness. Goodness. Too easy.
True.
Hey man, it's football season, bro. It's football season, man. We run a fantasy league, man.
That's right. So from July until December, we are not friends. So this is what he does.
Pretty much.
Are you watching college ball or no?
No, not right now. Not right now. When NFL season comes around, man, I don't watch nothing else. I don't even watch the NBA when NFL season comes around. Cause I don't really have time to watch much. So, I gotta pick and choose. I choose the NFL every time. But although I always catch them highlights though. I'm just gonna say Steph Curry just put up 49, but we're gonna leave that alone. But yeah, any questions on these two strategies?
Truth by the JP Morgan one, just a question. Is this in line with how you usually trade JPM, or you just went to it randomly and saw this potential setup?
Oh yeah, no, this was something that I just happened to see over the weekend when I was checking. I was just checking financial names because like I'm gonna check financial names a lot because I like to trade the sector. This is not in line with how I usually trade JP Morgan. You know me. There's a greater chance that I won't take the JP Morgan trade, but I will take the SPY trade. What I really would, if you want to know what I really might do with JP Morgan, let's talk about it. Why not? Let's go back over there. What I really might do with JP Morgan is I actually might wait until they hit that -80, -70 to -80, and punch back to the upside and take the breakout spin back up. I might end up looking for a long opportunity there too. All right. So
Nice.
right. Because those long trades on JP Morgan just hit so easily. So we'll see. We'll see what ends up happening. But I won't be taking a long from this particular point here where we are right now. No.
No.
All right. I like to see JP Morgan bleed first.
Exactly.
All right. So if I see some blood in the water, I'll wait for that same thing we just talked about, right? Wait for that bounce back over to -50 and catch this right here. Now, in all fairness, a bounce back above -70 is good enough as well, by the way, guys. All right, as long as it's accompanied by 1 and 2. Okay? So if it breaks below -70, below -80, back above -70, that's good enough as well, as long as it's accompanied by 1 and 2. And this what I talked about for the SPY, I promise you, you're gonna want to take those trades more often. The ones where I said like just take it as it breaks this key level here and use this as your stop. I promise y'all. Those are going to be some ones for y'all. If y'all pay attention to those. Like we talking about the first time it slaps this level. The first time it slaps it. Right? If it does so with a breakout swing, weekly pivot is good, high range is good, 20% range is good. I promise you, you're gonna want to take those more often. Right? Those are going to be some solid ones. Because again, it's just like the part that makes it worth taking is the simple risk management that comes along with it. Right? And the fact that, remember, this is based off of your average range. Don't forget that. All right. So the fact that it's based off of the average range, right? These breakdowns that push you back below this level are significant. They're significant. So I want y'all to keep that in mind. Any more thoughts? Any more thoughts? Or questions? Whatever have you. Yeah, let me just make sure I read this breakout swings to y'all, because sometimes I know y'all don't read through these, right? So this is your signal for when smart money is firmly committed to a specific direction. All right. This will help reduce those false entries, because it involves so many different it involves so many different signals there, you know. And that's really the point that I'm getting at when it's all said and done. All right. Let's see here. Yeah, so that I mean those are the two I'm looking at this week, man. I mean, um, I don't know if y'all got anything. I mean, I'll look at a few names that y'all want to look at, but those are the two for me. You know, and you know, a lot of times you can just line them up with whatever you see on the chart. Like I said, last week we hit that monthly. Um, last week we hit that monthly R1 right at the close of the week and pop from there. So that was, you know,
Can we look at Adobe?
let's take a look. Hmm. So you can see the mixed signals here, right? Um, you got weekly pivot still in the green, trading at the low range, no breakout swing, no 8-day trend. Your monthly trend is to the downside. Currently, you can see Adobe close at the low end here. I think what's interesting is you're at negative 80. That's what we just got done talking about, right? So in this regard, if Adobe started to bounce from here, right? And that specifically, if Adobe was to bounce from here, now these aren't going to be your weekly numbers, right? They bounced from here and broke that first resistance. And notice how I use the different tools, right? Notice how I use the different tools. In this particular case, I'm looking at the first resistance as opposed to looking at the 8-day trend, right? Simply because you don't actually know which side of this was the last to get hit because you don't have a signal here right now. So I'm going to focus on the first resistance right here, right? So next week when this gets filled out, actually it should get filled out tomorrow, I believe. At some point tomorrow, you should see last week's numbers pop up here, and you'll end up getting your weekly pivot. All right. So to watch Adobe bounce from negative 80, get back above that negative 70, break that first resistance right here. You know, want to see it get back above that 20 MA as well. Moji, want to see that also. And you know, maybe a weekly high. I mean, if you're talking about trading, right, then that's going to be the ideal things you're going to want to see. And obviously, I want to break out swing with it, you know, obviously.
So how does that help me? How do I use it to determine, let's say for option, whether I would take the call or I mean, knowing what I know about the stock, I don't see how it can like go any further or make enough movement on the downside. Um, what's the RSI?
Well, everything I just told you pointed to the upside, right?
Okay.
So we said they're at negative 80. What do we say about being at negative 80?
oversold.
Okay. So we say we want to see a bounce from here, back above negative 70, get above the first resistance, all right? Back above the 20-period moving average, and maybe a weekly high. All right. Go along with that if you get a breakout swing to the upside, right? So like remember, don't overthink this stuff. Right? If you have enough signal and confirmation, right? Then you go with that. So each and everything that we just talked about suggests that could lead to at least a short to medium term bounce, right?
Mm-hmm.
What we want to do is take the trade, take the position, right? Obviously, you see what your range is right here, $6.24. Over the past 8 days. So it's been a little tight because look at the deviation here, $11.21, right?
Mm-hmm.
So clearly it's been a little tight over the past couple of days. If I pull up the chart, what am I going to see? Let's check it out. Look at that. How could I see that from over there? Look at it. And compare those days to these days. You see that?
Mm-hmm.
Okay. You can see it's been a little tight. So, see right here, there's your high right there, about 340. Oh, matter of fact, oh wow, that's 340 on the dot. That's crazy. Yeah, that was the high, 340 on the dot. So clearly that gets me back above. Look, what's my 20 period moving average? 340.31.
Gotcha.
There it is.
And I know you said for day trading, you can't apply the principle of half the time, half the move.
Mm-hmm.
You know what I'm saying? You
Yeah.
can't apply that to day trading, but you can apply day trading.
Of course. All right. But that's based on your options contract. What options contract did you choose? It's based on that. Yeah, you understand what I'm saying? You asked, where is it on the RSI? So you got 41.57 right here. All right. See right there? See 41.57. Remember your RSI, when you're looking at stocks, your RSI is right here always.
Gotcha.
Only when you're looking at stocks. For ETFs, that's your relative volume. Your relative volume is here for stocks. RSI. When you're looking at an ETF, it's your relative volume and the actual volume for the day. All right. That you'll see there. But yeah, you said it. You said, oh, I don't see much more downside. I mean, if you're gonna say that, and then you see everything that you're seeing, right? What would make you doubt taking the move to the upside when you see it happen? Right? Sometimes you just got to do it. Set your stop loss. You got your stop losses right here. Right? So if I saw a little breakout or whatever that may be, I'll go ahead and set my stop, one or two, one of these. All right. Do I want to do you want to take a little less risk, make it a tight stop? What do you want to do? So I'm getting that.
And what would we use again as the breakout? Would it be like the weekly pivot, or
you're gonna be using the R1 right here, right? Yeah.
okay?
All right, because you're trying to break back because you're already you closed above the weekly pivot, right?
Uh-huh.
So You're gonna look for R1.
Or taking
Well, I mean, look, you're still at negative 80, right?
mm-hmm.
So you need to at least push back above that negative 70 point here. By that time, you're probably approaching your first resistance. That's why you're using that, right? Plus, you're below you're below your 20 period moving average, as you can see. If you're below the low range, and you're below your 20 period moving average, right? We don't trade against that. Okay, so if I'm not above that, then there's no reason, the only reason I would, you're below your 20 period moving average. We don't trade against that. The only reason I might trade against that is if I was like I would have to be down here somewhere, right? And bouncing off of that. So let's say I was negative 80 on the percent range. I bounce back above negative 70, and I'm recovering from 3 or 4 standard deviations to the downside. Cool. Now I'm trading back to my 20 period moving average. I'm trying to get back there, and that's a different story. But right now,
Okay, so
I'm pretty much there. What's up?
that. So a breakout to the first resistance would pretty much, well, I don't know, pretty much would determine there would be an increased chance of a breakout towards the second resistance if you took a call.
Yeah, pretty much.
Okay.
But again, you're thinking of it only in the context of the first resistance. Again, there are other things here that are playing a role. Again, you're getting back above your 20 period moving average. You're closing back above your 20 period moving average. Your percent range is improving, right? Which is signaling you're heading back towards the most recent high, right, of the past 20 days.
Waiting for first resistance.
What's that?
If the other signals are pointing towards an eventual upturn, what is the reasoning for waiting to purchase the call or waiting until
Nothing is pointing at it yet. Again, you need those things to happen. I'm telling you things that you need to happen.
Okay.
All right. You're at 331 right now.
Mm-hmm.
Where's your 20 MA?
340.
Okay. So I said you need to get above it. So the point of waiting is you don't have any signal yet. You see what I'm getting at? Sorry about that. Right. The point of waiting is you don't have any signal yet. The only thing you have right now is the fact that you closed above the weekly pivot. That's all you have. And that's last week's pivot anyway. Right?
Uh-huh. Yeah.
So, other than that, everything else here says bearish, right?
Yeah.
If I want to buy it, want to buy a call, sure, I could buy the call and say, man, this is about as bearish as it's going to get. I could do that. But, then that means that I could warrant buying an option at any point in time. I might as well say, you know what I mean? Like, I could just, throw everything out the window. You know what I mean? So like you wanna say, okay, cool. I need some rules in place, right? So one of the first rules is, right, if I'm below the 20 period moving average, I want to go short, right? But well, should I go short right now with the percent range at negative 80? Probably not, right? You know what I'm saying?
Probably. Yeah.
No, I said probably not. Right? That doesn't mean you couldn't.
Mm-hmm.
If you started to get some additional signals, maybe a weekly low, right? Maybe breakout swings are starting to click, and maybe you fall back below the weekly pivot. Things can stay extended, right? Just like any other thing, right? Maybe there's just some momentum there. All right. So maybe you're headed for a new 20-day low. That's 332. So I'm sorry, that's 323. All right. So maybe you're headed for a new 20-day low, right?
Yeah, it's possible.
So if you see that in your future, then sure, maybe that'll be a shorter term trade. You see,
Mm-hmm.
to the upside, I can take that and I can hold that longer. All right. To the downside, I'm in there and I'm out of there probably like 48 hours, 72 hours.
Gotcha.
Right. I don't want to hold on to that for too long because the signal's already, right? It's already pointing to a lot of, we've been there a while.
Yeah.
So now, if I see this bounce and it fails to get back above -50, then that now we talking about, okay, cool. Now let's go short, right? Once we start to see this breakdown here, this breaking down here, this breaking down here, right? Once all that starts to happen, now we talking business. Okay. So you have to start to. It's really like the thing about emojis. It's really just about having rules. You know what it's about, right? Am I really better at this than anybody, or do I just have rules?
Yeah, I'm trying to understand the rules.
Right? I just got there's just rules to it, and I follow the rules. Right? I play by the rules of the game. That's all I do. All right. And I don't think you can necessarily be. How do I put it? Like I think you just put odds in your favor when you follow the rules, and that's it. So the rules say below -80 is oversold. The rules say, hey, don't buy below the 20 period moving average unless you're well below the 20 period moving average, right? You see what I'm saying? That's what the rules say. Okay. So, you know, uh, the rules say above the weekly pivot is bullish, but above the first resistance is bullish momentum, right? That's what the rules say. So I can take it while it's bullish. If this is already giving me something, I'm already back above the 20 period moving average, no problem. Then I don't need to wait for the first resistance. But I don't have these two things. So I might as well wait for the first resistance. The 20 period moving average is above that anyway. Right? You see it? 20 period moving average is above your first resistance right now. Next week it'll probably be above it anyway. Right? So little things like that. Now if the 20 MA is below your first resistance next week, then you just need to get back above the weekly pivot or be above the weekly pivot. Does that make sense? But for right now, what we're discussing is the 20 period is above the first resistance at the moment. What if next week pops up and your weekly and your weekly pivot is lower? Is a bit higher, and your 20 MA is a bit lower. Whatever, right? I just need to be above my 20, which is above the first resistance. So that's what brought my attention here. You understand?
Yep. Thank you.
No problem. No problem. No problem. But watch it. Watch what happens. Watch it. Watch what happens. See if it plays out. All right. So we have SPY, JP Morgan, and Adobe. We're gonna watch those next week. Hey, somebody told me another stock. I forgot what it was though. Cecily?
Can we look at UPS?
All right, UPS. Okay. Different story, right? You see it? We got a breakout swing here. The question I think is, you know, pretty simple. Do they have more left in the tank? No puns intended. All right. So, this is one of those things here. And so you see it hitting 95.70 right now. That's kind of what I was talking about right here. The stock's at 95.80. How'd they get there? Let's watch the climb. So they did just like push up to close above that, all right, on the week. 95.70, right? So where'd they open the week at? They opened the week at 95.84. Okay. So this looks like one of those ones what I was talking about, right? I can say, okay, you know what? If I open up near this area right here, see, so like this, you can keep it really simple. All right, if I open up near this area right here, based on everything that I'm seeing here, I got me a sequential close. I'm not negative 20 just yet. Right. Let's see what else we got here. Right. I'm trading above my 20 moving average. Not too far above, but here's one of my issues. I'm gonna be hitting the 200 MA pretty soon. Okay. So that becomes one of my issues right there. So the question is, matter of fact, hold on. Matter of fact, let's check this price. Let's check this price out here. Okay. 97.12. So yeah, so pretty much they got close to the 200, but not quite above it. Now, what does Oliver Velez say? Rising item always wins. So maybe UPS is about to get back above the 200 period moving average. We don't know. Right? Is it okay to take the chance? That's the question. Right? So this is kind of one of the ones I'm talking about right here. Where am I okay with taking this position? All right. And accepting, this smaller stop right here. If we open up near this level on Monday, because you pretty much have all of your confirmations here outside of the weekly high. Right. So maybe on Monday you pop open here, you hit the weekly high, and you take a stop loss from this area here. All right. Maybe so. Or you open Monday near this area, you just take the shot right away and go for the stop. All right, because you already got the swing. So that becomes the question for you. Do you want the weekly high confirmation? And this is kind of what I'm getting at, right? I gave you guys the different things you can use to confirm this stuff. Most of it is here, right? Most of it is here. You're above negative 50. You got the sequential. You got the breakout swing. All right. You're above the 8-week average. All right. We'll see about the 2-day baseline. Wow, they closed exactly at the baseline. Look at this. Exactly at the baseline. That's crazy. Anyway, let's move on. That's starting to get a little creepy, by the way. Well, let's keep moving. They're above the high range. All right. So you got all your confirmations here except for right here, the weekly high. So that's the big question. do I want to take the trade here? Use this as a stop, or do I want to wait for the weekly high, take the trade there, and set my stop off of the high of the day? That's the way I see that, Cecil. This one's pretty simple. This one's cut and dry. Ain't much to look at there.
Yes, thank you. I like this. Be watching it Monday.
Mm-hmm. So, like I said, the only thing you have here to pay attention to is that 200 MA. But by then, you would have already made about at least a $2 move just to get there, which means
Yes.
you have decent profit. Go ahead.
And that means I sold that through first resistance.
Mm-hmm.
So nice.
Yeah, I think this one is, because your delta is going to be higher because it's only a $95 stock. So by the time you hit the 200 MA, you probably have at least a 30% profit here. More than likely. Depending on where you go out, but if you're using just the usual expiration dates that we utilize, 90 days out or so, you probably end up with at least a 30 to 40 delta, and they're not going to charge you a lot for that. So that's how I see that. All right, guys. 10 p.m. Savannah's looking at me like, let's roll, dude. So about to be up out of here. So SPY, JP Morgan, Adobe, UPS. We'll watch those for next week. SPY is my favorite still. UPS seems to be a pretty cut and dry decision. If somebody wanted to do this, you got two simple options and one obstacle. All right, two simple options, one obstacle. I'm either taking the trade. If we open near this level, I'm just going to take the trade because we're this is already giving me a signal. And then I'm just going to set a quick stop here, or I wait for the weekly high and set my stop from down below. Now, in the case of Adobe, a little more of a complex case. As you can see here, we have some mixed signals, so we need to get things aligned. So we need Adobe, we need to bounce on the percent range. We need to get back above the 20-period moving average. Adobe is actually the 20-period moving average is 10% below the 200-period moving average. So that gives room for some upside there as well. Get back above the 20 MA, and get to that first resistance. Unless the 20 is below the first resistance, then we just need to be above the weekly pivot. All right. And of course, we would love a good breakout swing indicator for an upside move. All right. What do we say about SPY? For SPY here, all right, we're looking to get, back above this area here. Potentially, if we tap this, all right, 677.25, right out the gate, that's going to be getting us back above our 20-period moving average. All right. And, we'll likely have a breakout swing at that point, in which case I'm going to take this trade here, use this as a stop, and keep it simple. Keep it real simple. It's going to be my favorite one next week. We're gonna watch out for that. So I want y'all to see how simple some of these trades are, you know. And win or lose, simplicity is always a game changer. You know, win or lose, simplicity is a game changer, guys. Gotta, you know, gotta definitely go with some of the simpler things that we can find. All right. Other than that, I hope everybody learned a little something about this Pro Pivot tonight. All right, I'm gonna upload this session to YouTube tomorrow morning. I usually wait to upload them for the next week, but you know, we'll go ahead and upload it today. Little Thanksgiving cheer. Yeah, that's what it is. It's Thanksgiving. That's what it is. You know. Anyways, I'll catch up with y'all later. All right. Everybody be blessed. Stay well. For some of you guys, I'll see you on Monday. For some of you guys, I'll see you tomorrow. All right. Be well.
Thank you so much.